Budget-constrained management style. When a manager's success is measured by his or her ability to stay within budget, he or she is more likely to take a cautious approach to any new business prospects that arise. Managers may favor projects and developments that are most conducive to budget construction if they rely too heavily on budgetary planning and control. Budgets and motivation. Early academic research on budgets focused largely on how much the tightness or looseness of a budget encouraged or discouraged management effort. Let us look into how this factor of a budget affects motivation. Number 1. Loose budgets, that is, ones easily attainable or poor motivators. Number 2. As budgets are tightened up to a point, they become more motivational. Number 3. Beyond that point, a very tight budget ceases to be motivational. Incremental budgets. An incremental budget begins with the budget or actual results from the prior period and adds or subtracts an incremental sum to account for inflation and other recognized changes. It is appropriate for steady firms where it is not anticipated that costs would change dramatically. There should be effective cost management and minimal discretionary spending. Let us look into the advantages of incremental budgeting. Advantages. Quickest and easiest method. Appropriate if the company is stable and the historical data is acceptable, because just the increase needs to be substantiated. Disadvantages. Builds in earlier issues and inefficiencies. Activities that are not profitable may continue. For instance, the business might continue to manufacture a component internally, even if outsourcing might be more cost-effective. Managers may spend unnecessarily to use up their budgeted expenditure allowance this year, thus ensuring they get the same or a larger budget next year. Zero-based budgeting. A technique of budgeting that demands that every expense component be properly justified, as though the budget-related actions were being carried out for the first time. Without approval, the budget allowance is zero. Suitability. It is suitable for allocating resources in areas where spend is discretionary, that is, non-essential. For example, advertising and training. Public sector organizations such as local authorities. Stages in the implementation of zero-based budgeting. There are 4 distinct stages. Let us discuss them. Stage 1. Managers should indicate for each of their responsibility centers which actions can be reviewed on an individual basis. Stage 2. The separate tasks are then each documented in a decision package. The costs and income anticipated from the chosen activity should be stated in the decision package. It should be constructed such that the package may be assessed and compared to other packages. Stage 3. Using cost or benefit analysis, each choice package is assessed and graded. Stage 4. The resources are subsequently divided among the several packages. Advantages of zero-based budgeting. Inefficient or obsolete operations can be identified and discontinued. Because more information and work is needed to complete the budget, it increases staff involvement at all levels. It also responds to changes in the business environment. Knowledge and understanding of the organization's cost behavior patterns will be improved. Resources will be allocated efficiently and economically. Disadvantages of zero-based budgeting. It places a higher priority on short-term gains than on long-term goals. If the budgeting process becomes too rigid, the organization might not be able to react to unforeseen possibilities or hazards. It's possible that managers lack the requisite management skills. Ranking might be difficult when the incentives are qualitative in character. Decision package. A decision package is a document that analyzes the activity's cost, states the purpose of the activity, identifies alternative approaches to attaining the purpose, evaluates the effects of conducting the activity at a lower level or not at all, and establishes performance metrics. Types of packages. Number 1. Mutually exclusive packages. These contain different methods of obtaining the same objective. Number 2. Incremental packages. These divide the activity into a number of different levels of activity. Base package. This describes the minimum effort and cost needed to carry out the activity. Other packages. This describes the incremental costs and benefits when added to the base. Rolling budgets. A budget that is regularly updated by adding a new accounting period, such as a month or quarter, after the previous one has ended. The new period is added, and the remaining budget is repredicted. Rolling budgets are appropriate for any business area that requires strict control or where reliable estimates cannot be generated, for instance, in a fast-moving environment. Advantages. There will always be a budget that extends into the future, typically 12 months. It forces management to reassess the budget frequently and produce budgets that are more up-to-date. This reduces the element of uncertainty in budgeting because they focus on the short term, when the degree of uncertainty is much smaller. Planning and control will be based on a more accurate budget. Disadvantages. Rolling budgets are more expensive and time-consuming. They have a chance of becoming the last budget, plus or minus a little. They run the danger of demotivating personnel if they give the impression that budgetary goals are always changing. Increased budgeting efforts could lead to less control over the outcome. Activity-based budgeting. Activity-based budgeting is defined as an approach based on an activity framework and utilizing cost driver data in the budget setting and variance feedback procedures. It is creating budgets utilizing activity-based costing methodologies overhead costs. Advantages. It calls attention to overhead activities and their associated expenditures, which can account for a sizable amount of overall operating expenses. It acknowledges that activities are what drive costs. Costs should be better managed and understood if we can control their root causes, drivers. By linking the cost of an activity to the level of service offered, activity-based budgeting can offer insightful data in a total quality management (TQM) setting. Disadvantages: determining the key activities and the cost drivers for them may take a lot of time and effort. It could be challenging to pinpoint specific individual responsibilities for tasks. It may be claimed that many overhead costs in the short term are uncontrollable and don't alter in direct proportion to changes in the amount of activity for the cost driver. Feedback control. It involves measuring the discrepancies between expected results and those actually obtained, and then changing the course of action or the plans for the future to get the desired results. This is the most common type of control system. Positive feedback. Positive feedback is feedback taken to reinforce a deviation from standard. No changes would be made to the inputs or procedures. Negative feedback. Negative feedback is feedback taken to reverse a deviation from standard. This could be accomplished by altering the system's inputs or process so that it returns to a steady state. For instance, a device can eventually require a reset to its default settings. Single-loop feedback. Single-loop feedback is control which regulates the output of a system. It involves connecting the strategy with the result. Results are observed, feedback is taken, and a different strategy is tried. The targets are not modified. Double-loop feedback. Double-loop feedback occurs when a business modifies the targets or budgets from the experience of attempting to achieve it multiple times. Feed-forward control. A feed-forward control system compares budgeted results to a forecast to determine how to proceed and take control action. Control is based on forecasted outcomes. In other words, if the forecast is not favorable, control measures are implemented before the results are actually received.